Bob Coleman, welcome back to Face. I just made a confession, telling people what my, emotional, mental problems are, codependence. Are you dependent on the market, Bob?
I don't know. I've been doing this 30 years, so I guess you could say that.
Yeah, I mean, we're lifers. So, 30 years, what's top of mind coming into today with the inflation data, the pullback in metals, and do you have something you want to share with us on the screen, or should I take it over?
You could take that over.
Okay. You want to show your mug?
Sure, if you
All
want.
right. Yeah, let's at least, um, let people see us. I'm not going to show anything. So, the big story has been, God, in a week, how the markets have changed. Um, 1960 gold on the employment report. It'll be what, 2 weeks tomorrow, and pretty vicious break. Silver, same scenario from 2450. Do you have levels that you're looking at when people call you up, Bob, and go, I noticed that there's pullback in precious metals? Where would you be an interested buyer?
Um, the physical world's a little bit different than the technical and paper trading side of the business. The issue you run into with when you're dealing with physical products is you're trying to not only look at prices but also premiums on products. So
Yeah,
last year was a big issue where you had a big drop in price, but the premiums on a lot of products just shot through the roof, and so it negated a lot of the pullback or savings that you would have gotten if you would have just waited and bought that normal dip. So that's a little bit different caveat than you're trying to play two different games at the same time.
yeah. So our premiums coming in with this decline? Does there seem to be more inventory popping up in the physical market? Particularly, people want silver coins. I know they
Yeah,
were very hard to find.
yeah. Last October, early November was the peak in terms of premium. You had retail dealers just throwing gasoline on the fire. The hype, the zero hedge article. Everyone was talking about shortages, and
Yeah,
yeah, I mean it was just a bonanza. And I think that's when you had Silver Eagles trading at like $20 over spot or something like that. That retail dealers were offering them. Um, that's crashed. Products across the board, especially the 1 ounce coin market, has come down big time. You're now at levels and premiums that we saw basically probably April, I would say May, April, June-ish of 2020. So this is the lowest premiums have been since then, and that was basically due to a buildup of inventory, where refiners were cranking out taking delivery 1,000 ounce bars, and then they were
right.
just making a lot of product and expecting this sort of activity to kind of continue after the new year, with reallocations because the metals did so well last year relative to the general market, and that never came to fruition. And part of
Now
the
they're
issue,
stuck with inventory.
they're choking on it.
So what is the average premium of a 1 ounce coin? It, could just be rounds. It doesn't. They don't have to be eagles. For what about $4 over spot?
Yeah,
Three
we,
bucks.
we yeah we have a pricing page on our site for many different products. Rounds are like $2 over spot.
Okay, that has
Yeah,
come down. Yeah.
yeah. I mean the silver Austrian Philharmonics $2.60 over spot. Back in October, November, that was like $6 over spot. I mean it was just insane, and it kind of killed the momentum of the market because the problem is the consumer just did they got sick of paying up for product. And then you had really December, January, you started to see the paper markets just take over, in terms of the action on the futures, not only on the Comex but also on the Shanghai futures. You had really the paper side become the determining factor of price action, and the physical markets stood back and just kind of watched the action. You didn't see the participation. People silver went to 24, and it was like, why should I pay these high premiums as well as pay a high spot price? And so people just kind of stood back a little bit.
Okay. Isn't Shanghai supposed to be cash and carry? So, but it's still described as a paper market like Comex.
Well,
What's the
they have
difference between the two?
the Shanghai Futures Exchange is it is a futures driven market. They have I guess it's the Shanghai say Shanghai Exchange, where they deal with the physical metal, where you actually have
Was
to have
that
the physical.
Singapore? I forgot the name of the guy. He was a big, was it Sinclair who went over to Asia to start a cash and carry
Yeah,
gold and
yeah,
silver exchange?
yeah, Singapore Precious Metal Exchange or something like that. I don't
Yeah.
know whatever happened to that. Um, I mean,
It was
that
going
was
to
interesting.
emancipate gold from the paper market,
Yeah,
which
yeah,
there's
yeah.
no emancipation, is there?
I no, it's yeah,
Huh?
it's from the trader's perspective, you'll always have a paper market or a derivatives market. It's just the nature of the beast. It's the use of leverage. It's the action. It's like going to a casino. It's a nice hook. I mean, it's that the physical world is just a much different, slower paced environment, that you're not looking to make a killing on a day-to-day type of action. You're really just
Right.
trying to buy it for a more longer term.
Okay. So, do you believe some of the stories that were coming out? I mean, as far as Comex and their warehouse receipts and a lot of silver being taken off or difficulty in finding that type of silver to deliver. Are you a believer that we're going to see this short squeeze that people have been talking about because of supply compared to derivatives? There isn't enough physical to cover the derivative positions, the shorts.
Yeah, it's an interesting kind of, I guess, argument you could say. Right now, the registered category is about 31 million ounces. In basically 31 million silver ounces backing all the futures contracts. The This is the lowest it's been. You could go back to 2010-ish, 2011, right before silver took off. So you have the opportunity for a squeeze if players are short the market and activity's been dying down as it has since COVID. You have the opportunity where you can become very illiquid, and when the roll comes, if the shorts are too one-sided and they don't want to deliver the metal that they, for example, have on the exchange, or they can't come up with the metal to deliver, then you have that potential for that squeeze in price, and that's a real effect that could take over. We saw that in 2011 when you had the roll in silver. I think it was the April contract. You had just basically, and you saw it sort of also on the March 2020 gold contract when players, everything kind of shut down, and you had the massive price differential between Comex and London market as well. So things can happen like that. It's plausible. The issue that I think the story that kind of unfolded with the silver squeeze movement is that they decided to say, let's just buy retail product and we'll squeeze the market. And that's very similar to trying to squeeze the lumber market by going to Home Depot and buying 2x4s. So the premium, the
Yeah.
industry just made a killing the last
Yeah.
couple of years on that
Okay.
movement.
Okay. Well, they were in the Baton Death March for many years and decades. So, every dog has its day. I went to your stream, Bob, and noticed there was some type of event that you were, sharing with people about digitization of gold assets. And, I'm still having a hard time wrapping my head around Bitcoin. Although I could see the advantages of portability, of wealth. That's a major advantage to me. Do you think that these products that they're going to roll out, like tokenization of gold, is going to be another scam, or could it be real? Would you trust it to put your wealth into?
Um, the digital programs, and I'm still learning them just like everybody else. Yeah, in terms of the technology and the software, you're going down sort of, you're trying to basically understand a different language almost. I think, and I tell people, if you invest in digital programs, think of it as a checkbook. Think about it as money you can afford to lose, because there is fraught with counterparty risk. A lot of them, like we mentioned in the call last night, very rarely do you see a full financial audit done on a blockchain program that's that has basically an entity or sponsor that sort of oversees it, that sort of centralization. And I think that's important, and that's something that we talked about the last couple weeks in a couple different spaces. The transparency and disclosures and disclaimers that need to be done. Just like if you're, selling a hedge fund to the market, or you're selling an ETF, if you have material information that should be provided to the investor, that should be disclosed. And some of these programs out there, they're not regulated by the in the U.S., yet they deal with U.S. customers that are participating on their exchange or platform. So there's a big question of, do these programs fall under the CFTC or SEC purview? And then if they do, what kind of reporting should they actually be providing?
Yeah, I mean, FTX is in people's recent memory. To me, when I was a commodity broker and I had an IB, it was important for me to be with a firm that was a clearing member of an exchange, because the exchange backed up the clearing member if there was a problem. You could be an FCM, non-guaranteed by a member firm, and you're out there hanging on your own. So it doesn't sound like they're ready for prime time. I don't think any institutions would go there with that type of uncertainties about regulation and return of capital, not just
Right.
return on capital. Do you feel that way about them?
Yeah,
Currently?
I think they're sort of in the infancy, I guess you could say. It's more retail driven. It's not
Yeah.
really an institutional type of product, because as I did a little bit of study on a couple of different digital products out there, and just uncovering a little bit of the hood, or popping the hood a little bit, you see red flags in user agreements, very one-sided clauses that protect the sponsor, and you have to ask yourself, why are these things so one-sided in terms of limits of liability and customer knowledge of the product, which in reality, I think from what I've kind of read, a lot of times the sponsor itself, doesn't even know the product that they're selling 100%. So how could a customer know more than the management team know? And that's unfortunate. And that's what I've been trying to explain to people, because as an investment advisor, part of your job is to explain the investment, but also the risks associated with it. And that's not being done in this type of environment as much as it should be, because a lot of these programs are trying to get off the ground. It's how can you raise capital or get someone interested if you're going to tell them the bad
or the egg, right?
Yeah.
What comes
Yeah.
first?
Yeah.
Have you seen the programs they now have with diamonds? They're commoditizing them in some type of package. They're doing it with farmland. It seems like you could buy a piece of retail has a grocery list of unusual asset classes, unregulated, that they could go into. Have you looked at that diamond one at
The
all?
diamond thing has been around. I don't know about the blockchain, but the diamond thing has been around for about 10 years.
Okay.
There was an outfit in New York that was putting together these sort of diamond chips in
Yeah.
sort of a card format. Yeah, that's the problem you're running into with this fractionalization of assets is that are they investment contracts versus a commodity? And that's one of the things we went through last night in terms of you can't take delivery if you own a piece of property, like land, for example. You either own it or you don't own it. And you're at that point, you're participating in whatever the yield or performance of that property may be in the future, but that's dependent upon, the sponsor or entity or whoever's running it. So those are things that, as professionals, you can decipher, but for the common individual that's just looking at the stuff, listening to the marketing and the glitz and the smoke and the mirrors, they may not understand all these risks and the differentials between, hey, do I buy a physical piece of metal like a coin and just put it in my pocket, or do I put it on a digital exchange and I have counterparty risk because now that piece of metal is fractionalized, it's held by a different third party or vault custodian like what we do. And then you have someone that has a master agreement that's overseeing that storage account. Those are different intricacies that need to be explained as part of the marketing.
Okay, why don't we get to what you do, because I find it fascinating. I remember when I lived in Phoenix, there was a vault in the side of a hill. It was a low mountain, and you go in and you'd have safety deposit boxes, and I'd leave, some of my gold coins there, and moved to San Diego and felt completely safe doing it. Was independent. I don't know. I did come back every year to visit them and say hi and count them again. I had to count them. So tell us what your storage facility is like and what you provide for people that want to hold physical yet feel uncomfortable having it all in their home or in a bank, and why your people feel comfortable doing your vault program with you.
Sure. Well, we're one of the larger private depositories in the country. We store roughly $600 million of assets at the facility here. We have a Lloyd's of London insurance policy for $600 million. We also have transit policies and also shipping policies, so we can actually do armored transport as well as just normal shipping and have the items insured from door to door. So from the vaulting side, we're a full-blown depository with the protections and so forth like that. We're not part of the financial system, so we don't take a tax ID number when establishing an account. We're storing personal assets, which privacy is a dying commodity. The flexibility and accessibility of metals, everything we do is fully segregated, so there's no commingling of assets. The assets aren't part of our balance sheet. Those assets are directed by the client. We listen to their instructions, and otherwise that metal just sits there and collects dust. So it's a real simple. We don't do leveraging. We don't do leasing. I have a registered investment advisory company that I've been doing as a registered investment advisor for 30 years. That has a subsidiary that buys and sells metals. So I'm not a dealer per se. What I do is I buy from the wholesalers directly, don't mark it up a lot, and then I just simply sell it to the client at a great savings. It's a simple model. I don't have a lot of carrying costs. It allows me to offer a little bit above wholesale rates to high net worth clients, to regular retail clients, institutions, so they can get whatever product that they see fit. That's, to me, it's key, because I look at the metals as an investment. From that standpoint, the premium, the game that the dealers play out there is, hey, listen, this is an insurance policy. Silver is going to go to $500 an ounce. Gold's going to go to 10,000. Who cares about the premium? That they get that mentality of just marking up product, which is unfortunate, because in reality, that these markets, they bounce around in price. They're not just going to go to the moon tomorrow. No. And so getting the best price
maybe
on that
maybe $38 silver, 62. Those are, but the people that get into the hundreds, I'm not there yet. So I wanted to ask you, are you looking forward to doing transactions with CBDCs in the next year or so? Are you going to be able to?
Well, I guess we'll have
to, right?
Yeah. I guess we'll have to see how it rolls out. Currently, right now, I guess it's more of a transactional settlement system than it is, for retail. It's more for, individuals, doing interstate or intercountry type business where they can settle the transaction quickly. From that standpoint, there is value there because you don't have to wait for settlement. It's immediate. But it's, the dark side of that obviously is Big Brother sort of knows exactly what you have and can push the button at any time, and your life changes like Trudeau did in Canada. So
yeah, I know the dark side. Well, you know what? They say that wisdom brings light to the situation, and everyone, Bob's an RIA. So if you have questions about other things that you're considering, I think you'll get an objective opinion. He's aware of risk and compliance, and that's important in these days where there's a lot of scams out there. And Bob, where would you be a buyer of gold and silver on this pullback? And are you don't wait to buy gold and wait?
I mean, if you're trying to trade it and trying to bottom ticket, we're probably 1800-ish area is probably low end of the trading range. I think the market is just trying to digest the big move from December, and this pullback is healthy because you want to see the physical markets come alive, because that's going to what we've seen in the past is that's going to scare the shorts. They're not going to press positions. But right now, the shorts have just been sort of the ball's in their court.
Their way. Yeah.
Yes. Yeah.
So you would an ongoing bull market, and this is a correction, consolidation of big gains from last year, but a buying opportunity. I concur.
Yeah. It's we see a lot of it with retail clients where they've gotten the mentality of buying on the dips because we're all sort of been accustomed to this whack-a-mole theory of, the prices go up, well, it's just going to get smashed right back down. So a lot of people just wait for the dip, and the physical metal investor tends to be more patient and waiting for the price to come to them, which is not a bad thing. I mean, it's the only downside is trying to gauge the premiums that that the industry has to deal with in terms of demand and supply at any time. So that can thwart some of the waiting for the price dip scenario where the premium on the product starts to go back up. And that's what I kind of watch for too. So it's not just price action, but also the supply of metal as well.
You have any decent product in platinum?
Yeah, I mean we have on our website we have certain products with premiums associated right with them. So the 1 ounce bars, 10 ounce bars, and then you have the coins. So it's and then I can also get the 50 ounce plates, the Comex approved material as well, or deliverable bars as well.
Do you remember when platinum used to be at $1,000 premium to gold?
Yep, those are the old days.
You think that it's undervalued now?
Yeah, I think so. I mean, if you look at the gold silver ratio, you look at the platinum to gold ratio. I mean, yeah, you're right. It's and not only that. I mean, you had platinum and palladium even. Yeah, palladium was just storming ahead. But the platinum story is really about supply out of Africa, South Africa, more so than it is about demand usage at the moment. Maybe hydrogen comes along a few years from now, and there's a new demand. You don't need
a catalytic converter then.
Yeah, platinum is used in that fusion process, I guess, in terms of conversion of energy. So, yeah. So that I mean that's something that's been obviously in the works for probably 15 years. And there are some hydrogen cars out there. So it's not like Hyundai has one. I think Honda has one. So it is out there, but it's just not mainstream yet.
The greenest car that could be produced is what Fred Flintstone drove around. Right?
Yeah.
Well, so you got some, calluses on your feet, but it'd be a great car to walk around in.
Yeah. Well, the nice thing with hydrogen cars is the emissions is simply H2O. That's it. So,
okay. Wow. All right. Well, pleasure talking to you, Bob. I think
definitely
it's going to be a banner year. After this pullback's complete. I'm looking for some fireworks. So
yeah, do you kind of see the market heading up really toward, maybe the second half of the year? Is that what your thinking is?
Yeah, I'm thinking that we bottom, you know, between here and the beginning of spring, and maybe consolidation, but I'm looking to accumulate at 1800, 1780 miners, in fact. So yeah, that's my view.
Yeah, yeah, I kind of see that unfolding as well, especially when we get past this debt ceiling limit. The market starts issuing more, or the Treasury starts issuing more debt. That's going to put a liquidity squeeze on the market. I think, mid part or later part this year, which could put pressure on the stock market. But I think the advantage is you may see some allocation over to the metals again, which I think that would be a welcome news. And at some point, that may put also pressure on the dollar, which the metals will
That's
react
the
to as
key.
well.
That's the key. You
Yep.
need a dollar bear to have a gold bull, in my view. All right. Well, listen, really appreciate being with you today, Bob.
Sure.
Good luck. You could follow Bob at Profits Plus ID on Twitter, and his website is goldsilvervault.com. And you would take calls if people have some questions, right?
Oh, definitely. Yeah. I'm always up there to educate people and get kind of give them the pertinent information, not the sales and marketing uh, spiel, I guess.
Okay. Bob Coleman, everybody. Thank you, Bob.
Okay. Thank you, Dale.
All right, may your future be shiny. Take it easy.
Okay.
All right. That's a wrap, everyone. You could join the team in 17 minutes on the Morning Edge. See everyone to wrap it up, TGIF tomorrow. Good hunting the rest of the day, and don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.